Welcome back to Finding Perfect Property, Diary of a Buying Agent. I'm your host, Camilla Dell, and today I'm absolutely delighted to have on the podcast Islay Robinson, who is the founder of Enness Global, and his colleague Toby John Cox, who's the MD. Enness Global is a high net worth and ultra high net worth mortgage business, and they established the same year that Blackbrick was founded in 2007. And it's fantastic to have especially Islay on the podcast today, because Islay and I actually go back way before Islay started his business at Enness. We were actually both originally at Foxtons. I was on the estate agency side of the business in the corporate team, and Islay was working for Alexander Hall, the mortgage business.
That's right, yeah.
And owned by Foxtons, and that's where we all...
I think we sat about a metre away from each other for about 3 years.
We sat a metre away from each other, and here we are today.
Amazing, huh?
All these years.
That's it. Good
Amazing.
for you.
So welcome. Thank you both
for
joining. I would love to start, Islay, with you, just really starting with the journey of Enness Global. What made you want to set up your own business? How did you come up with the name?
Yeah, okay, all right.
What was the journey?
Yeah, absolutely. Like you, we were at Foxtons headquarters in Chiswick in 2007, and we'd built up a desk dealing with high net worth, complicated foreign buyers into London. And really at that stage, Alexander Hall wasn't set up to deal with those customers. We were finding more banks. We had to run the process in a different way. So it was just a natural thing for us to leave and set up a business. We're also penned in like battery animals back then, if you remember. I wasn't really allowed to leave or meet anyone. So the kind of need for freedom was something. And we were 26 when we started that business. So the idea that there was a grand plan to build anything, not really. We just wanted to help this sector of clients in a way that didn't quite fit that model. But like you, the training that we got at Alexander and Foxtons and the network after as well was phenomenal, and that's a great help all the way through to today. Sure. The name is a bit of a random one. My ex-business partner had a double-barreled name. Single name and a double-barreled name comes across like a weird law firm, so that wasn't really it. At the time, Barcap had shortened its name. Sorry, Barclays Capital has shortened its name to Barcap, and we thought that was cool. So we came up with the word Enness and Capital and shorted it to NCAP, got all the business cards printed, and then realised after we'd spent almost all the money we had on business cards in Chelsea that MENCAP is the name of that charity for kind of struggling children. And also the European Safety Car Standards Agency is called MENCAP as well. So so we reverted back to Enness, and that's just been the name. It doesn't really mean anything. It's just a word.
Yeah, fantastic. And at what point after setting up Enness did you realise, okay, this is bigger than just me and my business partner, this is a growth business? It started really well. So in 2007, it was just before the global financial crisis, and everyone was buying everything and mortgages were pretty much unregulated. And we started fast, but for a really short period of time. And then the market just stopped abruptly. And I remember I had something like £30 million worth of mortgages with Cheltenham and Gloucester at the time, which was a big number. There's lots of little applications. And Cheltenham and Gloucester just stopped lending almost instantly, as everyone else did. Yeah. So started great. And then, bam, we hit the wall and everyone stopped lending for that period of time. But that was really the catalyst for the business. We looked at what we had, which were wealthy customers that wanted to borrow money. And we saw the market, which was the usual banks that everyone used weren't lending. And those banks paid commission to brokers, and that was a big part of the model back then. So we thought we have to find some other lenders that will lend. So we went out and we found all the banks that would lend but didn't pay a commission, and we found lots of other banks. And then we just charged our customers a fee to solve their problems. So today, so a couple of years, it just rumbled along as doing a deal, making, buy, and so on and so forth. We closed a couple of very, very big deals, which kept the lights on and kept us out of charity shops or whatever else it was back then. And then it's kind of lifted off from then. So it wasn't the easiest start. Yeah. But it was the same as you at that point. Same as me. Often people say, oh, you set Blackbrick up in 2007. What was that like right before the crisis? And I say, well, actually, it was a brilliant time, because I think a lot of our clients got quite nervous about investing into the financial market, and they got much more confident and comfortable with bricks and mortar. And it was, in hindsight now, it was a great time of Big Island back in 2007.
Didn't feel like it at the time.
It didn't. It felt like people were being very brave, but but as we now know, it was a great time for Big Island.
I remember getting to kind of lunchtime on Tuesday and having done all of my work for the week.
Yeah.
There wasn't much else to do at that point, so we'd go to Vodka Revolution in Clapham and stay there for the afternoon.
Now, no?
And it was a difficult time, and we were very young at that point as well, so it was a big learn curve.
Yeah. And Toby, coming to you, when did you join Enness Global, and tell us a little bit about your journey to the firm and what your role is in the firm now?
So for my sins, I also did a few years with Alexander Hall.
Yeah.
I then moved to Dubai with my wife's work and sort of dossed around for 3 months, spending money, having quite a nice time before getting a job at AXA Insurance. Realised that was probably not the one. And then saw Islay and Enness in the back of Mortgage Strategy suggesting they were opening a business in Dubai. A quick LinkedIn message later, a meeting in a hotel in Dubai, and then a job offer, and that was 8 years ago.
Yeah, that's it.
And how long were you out in Dubai representing?
So I did 6 years with Enness in Dubai.
Fantastic.
Yeah.
And Enness out in Dubai is really there to hunt for clients there in the Middle East to deliver the mortgages back here.
Yeah, so we move around the Middle East, Saudi Arabia, Qatar, and all the other big names you'll be familiar with, finding clients with super prime assets in the UK and helping them finance them.
And how was life in Dubai?
Yeah, it's pretty good fun.
Yeah. And
I think I had 2 years of serious work. And
and now you're back here in London again. As you move back. Do you miss Dubai?
Not particularly, no. I miss elements of it. I'd say it's Islay on payday. It's pretty painful, but other than that, there's not much for it I miss now.
It's interesting, isn't it? Because at the moment, Dubai is the buzzword, isn't it? Everybody's talking about how great it is and how, the UK is losing lots and lots of millionaires and Dubai is taking a big chunk of them. So it's interesting to...
I think I was the only one on the plane home and everyone else was flying out to Dubai.
I think Dubai obviously has all of its advantages with security and low tax and sunshine, all of those type of things, but it's not as cheap as it was. It's an expensive place to be. It's very competitive. If you lose in quite a big way, so there isn't the same kind of safety net as London. I lived there for a short period when we were setting up the business. It's not that easy to exist there, in the way that you exist in London with the kind of depth of services and everything else. So I'd be interested to see how it turns out. I'm not leaving London. I'm not moving to Dubai. I've got children in the same school as you, so we're stuck here until that's finished. But I'm interested to see what happens.
Yeah. So I want to talk a bit about how Enness has evolved. Obviously, you've got your office here in London, and you've got an office in Dubai. Mm-hmm. You've got offices in lots of other places as well. So tell me a bit about the expansion.
So in kind of 2013-14, when London again was getting it was in that bumpy patch, stamp duty was going up, Brexit and everything else, we thought, how can we diversify the business? So we opened a business in Monaco. The thought was that we would help our customers in London finance their south of France properties, which we did. We did a couple of transactions and that was good. Yep. But what we actually found was a huge community of people that wanted to access finance for their London real estate and other things. So we just tapped into a marketplace which was underserviced for what we do. Mm-hmm. And there are lots of myths. The myths in the mortgage markets are, if you live in a country other than London, you can't get a mortgage. You absolutely can. You just need to speak to the right people. So that was a great learn for us. We opened up a really big network. We then set up the Dubai office for the same thing. Good people, good environment, lots of customers that wanted to finance their London, UK real estate. Yeah. We built the Jersey business, which had... well, you do an awful lot with the corporate service providers and the trustees, so we wanted to be close to those guys, which is another big source of business for us. Switzerland, obvious, lots of wealthy customers and lots of private banks where our customers are. Yeah. The USA is the next place that we're looking, so we've made our first hire in Dallas. We made our second hire last night in San Diego, which is in a different part of America over there. Yeah. And we've got some big plans to look into that marketplace for two reasons. It's a big place, lots of opportunity. Americans buy London property, which I'm sure you're seeing, and there is a big movement, the UK to America, so we're just tapping those kind of transfers.
Why Dallas and San Diego?
Why
not New York?
Yeah, we hire people. Okay, so your journey's been the same, trying to find people that fit into the business. So our philosophy now is we find, like we did with Toby, in fact, and everyone else, if we find someone that's going to fit in the business and contribute and add to the culture and develop the business, we hire those people and then we build around them. Yeah. Instead of saying, I'm going to be in New York, let's start the interview process, let's interview 20,000 people and try and pick one. We just find hiring the person easier than the role and filling the role. So that's why it's gone that way. Yeah. New York will have pretty soon, I'm sure, Miami and all of those other places.
Yeah, interesting. I think the US is really interesting because there's a big link right now between UK and US. We've seen a big increase in our US clients. About 25% of our clients now come from the US.
Right?
For all sorts of reasons, diversification. It's cheap for them now. They really see London as a springboard into Europe. So I think it's great. I was from Dallas. I think it's direct flights to London.
Yeah, that's it. And it's unregulated. And it's pretty cool. But if you think about the big American names buying in London over the last year or so, obviously we learned about Tom Ford a couple of weeks ago with his big one. We think the one that bought in the middle of the park is an American guy. Yeah. And there's quite a few of those big names. You were talking about Zuckerberg and whatever he has over here as well. Yeah. So hopefully we're hoping that becomes an even bigger trend than what it is at the moment.
Interesting. Well, good luck with that. And what about in terms of your expansion? Obviously, you've got your global offices and global network, but also you've now started lending against more than just property and lending against crypto and digital assets, which I think is really brave and unique. But tell us a little bit more about that offering and why you developed it and how it works.
So through the process, you've got rich person, wealthy person buying a property and they take a mortgage through their bank. That's ordinary, that's what you expect. But when you look behind that, the way that some people finance their real estate investments goes beyond that mortgage, so they borrow against their securities. Yeah. So if you've got a load of Tesco shares or Facebook shares, you borrow against that. So if you look at Elon Musk, he has a huge credit line against his Tesla shares and he uses that to buy his real estate. So a couple of years ago, we entered that market of borrowing against listed securities. We built a function of people raising money into their businesses at the UK at the moment, which is a good marketplace. So how do businesses and entrepreneurs fund their businesses? Because that's part of the process as well. If you want to buy a house, you take money out of your business, you pay a big dividend. Is there another way of looking at that with different types of funding packages? Crypto came up a couple of years ago and we just saw an increasing number of people saying, I've got a big bag full of Bitcoin, can I borrow against it? And up until recently, there wasn't very many options, but the number of options are just exploding. And then add in art or cars or watches or the horse deal you nearly did last year, so a loan against some horses. People borrow against everything. And that's really what our proposition is now.
Crypto is notoriously volatile. So I'm intrigued how you can borrow against something that is so volatile.
More volatile than London property at the moment.
Definitely.
Yeah. The price of London property.
Yeah, exactly.
Not the attractive.
It just kind of plods along.
Yeah, it
doesn't
does.
really do very much. It's stagnant. Crypto is like woo, 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 woo. So how do you borrow against something that's going off and down? It's so volatile.
It's obviously changing very quickly. That the number of lenders who are in the space interested in doing it and the way in which they take security or look to take security, custodize or non-custodize the token. Obviously, the main currencies are well known, and those that could be quite attractive in terms of reasonably good loan to values, but also the pricing on those pieces of debt are much cheaper, possibly than what we're seeing on real estate at the moment, which has also encouraged, I think, interest in people. How do I buy this house in London but not pay the 4 or 5 6% that you might have to do for the mortgage.
So give me an example. Let's say I've got, I don't know, £1 million worth of Bitcoin.
You've got more, Camilla.
Yeah, way more.
I can see. Do you not? Is that right?
It's on the database in her
Yeah, that's it.
Let's just logically say I have £1 million worth of Bitcoin.
That's it.
What could you do for me then in terms of leveraging that?
Probably 50 or 60% conservatively.
Wow.
Yeah.
And at what sort of rate? So what's the cost of borrowing?
It's certainly cheaper than a mortgage. So if you take USDT, which is slightly more stable coin than Bitcoin, you can get up to 100% gearing and at rates starting with a 0.
Wow.
It's the same as any asset. So it's got an intrinsic value.
Yeah.
And so with a mortgage on a property, you've got 60% loan to value. If the property value drops, you're in negative equity. Nothing happens. You have to repay it. With securities finance and Bitcoin loans, if the value drops, there's a margin call.
That's it.
So you either lose your assets very, very quickly, or you put more security in to reset that loan to value. So it's
Higher risk.
it's more risky, it's more complicated. There's a lot more factors to it than a mortgage against your home. But on the other side, they're not really assessing your income. Okay, so you don't need an income to borrow against it. There isn't a valuation in the typical sense of a UK property because the value is public and it's a public thing. So there are lots of advantages. We're seeing a huge number of customers now calling and saying, I bought Bitcoin 10, 12, 15 years ago. It's worth X, XXX, triple X, whatever the number is. I would like to buy a house in Miami, an apartment in Marbella, a house in London. How do I do that? And I think our approach of look at the loan against your Bitcoin, how else can you borrow? Let's make sure that the structure, the tax, the legal process is correct. We'll just make that work for you. Have you seen any Bitcoin buyers in London?
I have to say I haven't.
Okay.
I haven't.
Let's find some.
I think the other thing you said of there is risk.
Yeah.
So the perceived risk is the drop in value and therefore you lose your currency. But if you've bought a house with it, then you've just moved the value somewhere else with a loan that then disappears. But also typically these loans are non-recourse to wider assets and liabilities or personal guarantees. So possibly they're less risky in a sense than traditional finance.
I want to move on and talk a little bit about the mortgage market. Obviously, mortgage market's taken a really big battering ever since we had the mini budget and interest rates went up, and they've never really come back down to the good old days of 1.5%.
I had hair at the start of that one.
Bank of England base rate today is
4.5.
4.5%. So, what's your predictions for the year ahead? What do you think is going to happen? I think everyone had hoped rates were going to come down faster than they are. Are you still seeing a lot of appetite for people wanting to borrow? I mean, at Blackbrick, we've still continued to see far more cash buyers than buyers wanting to take finance. I think because the rates are still perceived to be high. What's your sort of take on the market, Toby?
What I think about interest rates, I think you're right. Everyone wanted or wished for them to come down quicker than they maybe have, and certainly I think will do. I don't think there's any big drop in base rate this year. I do think we're at a point though where interest rates, certainly for on the high street, you're looking at a tracker products now at 0.11 over Bank of England, so the margin's still very tight. And even if you're international, you're probably at 0.6 over the Bank of England now.
Okay.
So the cost is slowly creeping to a point where I think people feel quite comfortable with it. We're probably still a little bit away from that, but there's also a window of time now maybe where you're buying a property, there might be a slight price reduction because of the where interest rates have been for the last 12 months to 6 months, where actually paying 50 bits more than you might do in 6 months to a year gets you that property that you maybe won't be able to afford in a year's time. So I don't tend to worry, or I have less objection to interest rates than I have historically. I think when they're talking about it on the way over here, the objections to buying UK real estate at the moment probably aren't purely the mortgage piece. There's a lot more hot air around that's maybe leaving people on the fence.
And how are the banks at the moment? Are they still, are they still got appetite to lend on prime central?
I think there's a huge appetite to lend at the moment, probably more so than there has been in the last couple of years. So last year, when the base rate went up, the supply chain just failed. and every part of the process became very, very difficult. So if you remember kind of April last year, it's really hard to get a mortgage. Even once you'd got the mortgage, it's really hard to deliver the mortgage and complete on the transaction. I think appetite from the banks is very, very full at the moment. Everyone's keen to do it because there isn't as much around.
So rates coming down, are they sort of all competing and jostling?
I don't know. Do you know, look, stamp duty when we started for a £10 million house was what, like 4% or something like that, and now it's 18% if you're a non-resident. I think that the comparison to previously, to the previous cost, is still to work its way out of its system. Mortgages at Alexander Hall when we started in 2007, a 2-year fixed rate was 4.5%. That was the price then, and the property market was really moving for it. So I think that now people are just getting used to this new cost of money, and once people are used to it, they then build their plans off the back of it. Your buyers, your glamorous, wealthy, high-value transactions that we see all the time, they're using debt as an instrument as part of their wider planning. When you and I buy a house, we just haven't got the money, so we need to borrow some, and that is the difference. So it's how does it fit into their wider planning? And at the moment, the cost is a little bit too high, and a slight change, and then those dynamics start to change it again.
Yeah, I had a call yesterday afternoon. At high leverage on prime London assets, there's been a sort of handful of players. One of the big household name private banks yesterday increasing loan to value up to 85% from 70%, removal of their super prime cap at 50%, which was historically at 20 million. So I think there is quite a lot of appetite actually in the banks to do something. There is still this sort of friction in the transaction, which is back office and credit, the process in terms of legals and searches and collecting those. So yeah, I don't think it's necessary that there's no brakes on lending. It's just navigating from here to here. Yeah. That bit is super complicated.
How's stamp duty playing out when you see borrowers now?
I think, I think buyers generally have got used to high rates of stamp duty, and sort of, these incremental little jumps that we see when there's a budget are definitely not helpful, but they're also not putting the brakes on the market and causing the market to stall. I think still when you look at the cost of buying in the UK, or the cost of buying, holding and selling versus other key global cities like New York, Singapore, Canada, those sorts of places, actually, things here in the UK are actually not that bad. I think the difficulty is we had it very good for a very, very long time. But look, don't get me wrong, if I could wave a magic wand, the solution to unlocking the market and creating more work for everybody would be to lower stamp duty rates. I think that's a horrible tax. I think that's too high. Whether that's likely to happen is another matter. I want to talk a little bit about, you mentioned kind of, time frames, that it takes a long time. We find the same thing, conveyancing a deal today. It's extraordinary how long it takes. And I think a lot of overseas buyers sometimes are like, wow, like in America, everything is done in a week.
In Dubai, your paperwork, bang, see you later.
What do you think is one of Enness's USPs in terms of helping buyers navigate?
How quickly did you get that mortgage offer?
10 days.
10 days. How big was the loan?
International client, 3.68 million, UK and American tax resident. So I think there is, if you've got the right team, right buying agent, right solicitor, right broker, tax people in place, then actually these things can happen pretty quickly. I think also we as a group of brokers need to get away from selling on price and selling on deliverability of solution, which is basically centric to what we're up to. And if you've got that, then it can happen quite quickly. If you have the opposite of that, it can take a lifetime to get these things through.
Just to explain that point, there are some incredibly cheap lenders, and they will take a long time to deliver, and it'll be lots of hoops, it'll be complicated, it'll be frustrating, and so on and so forth. Slightly up from that, there's a whole range of banks that are marginally more expensive, but easier to deal with, more responsive, more pragmatic. And we say to our customers, this is cheap, it's going to hurt. This is not as cheap, it's going to be a lot easier. And more people will accept that second option. But they need to have the ideas.
Or certainly you have to run both.
Yeah, or do both, exactly.
You're talking about the difference in the cost of someone's gym membership, right?
Yes.
The difference isn't
You
massive.
get what you pay for. No, I'm a big believer in that. So what do you think your USP is? Because obviously there's a lot of players in the market. You know, there's a lot of mortgage brokers out there. What do you think is the sort of the Enness edge?
So there's so many.
Yeah, how long have you got?
Let's get another ream of film for the camera. We talked about that international perspective. So lots of brokers in the UK still really struggle when it comes to a borrower from a different country.
Yep.
Some of the big networks won't allow their brokers to deal with people from America or Europe and so on and so forth. So we can do all of those things. So where the individual comes from, their background doesn't bother us. Our lender network is vast. So going back to those days I described at the beginning where we just found new lenders, we've constantly got people researching new lenders and bringing new banks and providers to us. So the number of lenders in the number of countries across all of those products exceeds everyone by quite a distance. And that just allows us to offer all manner of different solutions. Okay, you could do your mortgage here, but what about if we leverage this or borrow some money here or look at a different way of doing it? Yeah. And we don't just sell a product. This is your 2-year fixed rate. It's 4.999. We deliver the transaction. So the reason we like working with you is that we're all, with the lawyers and the surveyors, trying to get to completion, not trying to get the cheapest rate. And it's that process of solving the problems, making the process happen faster, keeping everyone on the same track is really the thing that we do very, very well.
Excellent,
yeah. So the price isn't really as important, right? Yeah. It's about delivering the transaction. That's really important at the bigger values.
I want to talk a bit about sort of individual deals and some examples because I think that always brings things to life. What is a transaction that you're most proud of, or was the most challenging, most complex mortgage you've ever
It's also quite.
There's so many, isn't there?
Yeah. Your favourites?
My favourite this year,
Yeah.
I drew 20 million down on a Grosvenor Square flat for an American billionaire. Most interesting thing about that was his story to wealth, which is he bought a failed business arm of one of the conglomerates for 100 grand. Today it's worth 3.4 billion. So he's a phenomenal human being. My favourite one of last year was a loan on St George's Hill for a chap who's got a 300 million claim against FTX and comes from an interesting part of the world. So,
Wow.
you know, we see awesome, great clients and we're lucky.
Stories behind the clients.
It's that, yeah, exactly.
I agree. I think that's one of the best bits about our job too. What about you, Aya? What's a loan that you've worked on or mortgage that you've done that really stands out?
I like the ones where people have got themselves in some bother or their circumstances have changed and then they have a loan and their own bank won't extend it and they're worried, they're anxious, they don't know what's going to happen. We speak to them and we just solve all of their things. So it's not really just keeping them in their house, it's just sorting out their kind of whole lifestyle. So that's quite a favourite thing. We've done loans all over the world. So, you know, Ibiza's big for us at the moment. We're doing lots of business there. South of France is good. The big chateaus in Switzerland are fun. There's been some big ones. The ones that have got away as well. We can talk about those ones. So half of the big properties around Regent's Park, we have had fully credit-backed valuations all set up and they haven't happened. That hurts. One day we'll get one of those big ones.
Why don't they happen? What's the reason for that?
Time, probably.
Yeah, time.
Time kills transactions, doesn't it? That's the
Or
thing.
just weird things. When you're at the kind of 0.01% of everything, weird things happen and they don't really make sense, but those transactions fall away. So there's lots of those. I bet you've got a few of those as well. The ones that got away.
Yeah, we don't like to talk about
No.
So better to talk about it.
Talk about them almost every week.
Yeah.
Top tips for anyone thinking about buying in London at the moment, what would they be, Toby?
Get ahead of buying, as in get your ducks in a row. The mortgage, the solicitors, everything else. That's the best piece of advice I think you can give anyone. And then of course instruct someone that can find them the correct home.
Yeah, that's it.
That's the main one.
Price is pretty good in London at the moment, isn't it?
In terms of the market?
Yeah.
Yeah, we definitely view the market we're in at the moment firmly as a buyer's market, 100%.
So the kind of, there's a scarcity of good property. That seems to be what we hear. There's an awful lot of second tier property that is available, and those things have been languishing on the market. So if price is good at the moment and there is a scarcity of those excellent ready to move into properties, just move. I think it's the right time to do it. And if you're going to pay a little bit more on your mortgage or stamp duty, you're going to pay your stamp duty at this rate, over time it's probably good. We've always said that. So it's to get on with it, I think.
Crack on, yeah.
Yeah.
And Isla, one for you, just to finish with. If you could give it one piece of advice to your younger self before you set up the business, what would it be?
It would probably just be take a bit of a longer term view to what we're doing. So at the beginning, the business was about kind of growth and build and, reinvest and all of those things. And that's been great and all of those kind of things. But it does take a bit of time to get to the level that we've got to. So probably should be a little bit less impatient and just trust in the process and focus on the things that are important.
Brilliant.
Yeah.
Thank you. Thank you both so much.
Thanks, Camilla.
Toby, Isla, thank you for coming on the podcast today. That brings us to the end of Finding Perfect Property, Diary of a Buying Agent. If you are looking for advice on a mortgage, then please do reach out to Enness Global. And don't forget to like and subscribe on whatever podcasts channel that you use. See you next time.